So many questions about forming a trend identification and how you can form the end of a trend. And so realistically, we're going to break this down, right? So when you have kind of an up trade going up like this, and then you have this down trade going on over here, right? We're going to be going over a masterclass on how you can spot trend reversals accurately. Why not here? Why not here? What gives you a trend reversal, right? So a lot of this comes down to understanding the price action around the trend. So this is the Dow Jones on the 5-minute time frame. I'm just going to go to the 15-minute time frame as well, right? So what we can see over here is we can see a trend reversal. So we were definitely bullish, then we switched to bearish. And so when it comes to forming a trend reversal, I'm looking at a couple of things, right? I'm looking at the Asian session. This is very important to understand. I'm looking at the Asian session. I'm then looking at the PO3, and we're going to go over the power of 3 in a lot of detail, and we're going to look at what we call entering inside of a wick. Entering inside of a wick. And then the last thing we're going to look at is, of course, order flow, right? I can't make a video without order flow because order flow is the most important thing. And so what order flow basically tells you is buyers versus sellers. And so the question I want to ask to every trader is, when you trade, there's only 2 buttons you have access to, right? So what are those buttons? So those buttons are going to be buy and sell. So knowing where buyers and sellers are aggressive and where buyers and sellers are passive will ultimately help you determine trend absorptions and trend reversals, right? Super important. So let's first start with the Asia session. So let's just kind of move this to the side. How do I use the Asian session to my advantage, right? So the Asian session itself is a low volume time of day that is very important to consider. So this is the Asian session, right? So the Asian session will start at, if I just get the timings up, Asian session starts at 20 o'clock EST and finishes at either 12:15 or simply just midnight New York time, right? So this is your Asia session. So what is the importance of an Asian session, right? So the Asian session I use very simply. I want to look at the Asian low with one red line, and I want to look at the Asian high, the next red line. And so if we now go down to the 5-minute time frame here on the Dow Jones or US 30, right? The way I typically use the Asian range is I want to see price significantly overextended, so significantly above the Asian range. And so this is my first kind of protocol. I want to see how price behaves around the Asian range. So specifically, we've taken out the Asian low and then we took out the Asian high, right? So when you take out the Asian range low first, and then we go and overextend and take out the Asian high, I want you to think about as a trader, right? What does this represent, right? What does this actually mean? So the way I define this is I call this a two-phase manipulation. So this is what we call trapped sellers, right? Sellers here have been trapped. So what that means is we call it a two-phase manipulation. This is manipulation phase 1. So what's actually happened here is that the market itself has taken out or enticed early sellers, right? They've swept sell-side liquidity. What we define here as sell-side liquidity is simply the Asian range low. Now, once you have that, price has taken out the Asian range high. And so when price takes out an Asian range high, you typically don't want to be buying from this area, right? Buying near the Asian range high is typically a disaster. The reason why is because we are significantly overextended above the daily opening price. And so now this leads on very nicely to step number 2, which is basically the power of 3. So if we just go over here, I always use the weekly, daily, and the 4-hour power of 3. Let's start over here with the daily power of 3, right? So what we can see is we can see prices taking out the Asian low and Asian high. And just quickly, one more point about Asia, right? Asia simply accumulates liquidity like this. So if Asia accumulates liquidity, you want to ask yourself, what does this mean in London and New York, right? So we have a range like this. This is what we call the Asia range, or more specifically, the accumulation, right? We see an accumulation in price. And so when price sweeps the Asian low, and then price goes and sweeps the Asian high, like exactly what we have over here. You need to understand what's going on here, and more importantly, first, what's going on here. This is manipulation phase 1. And so manipulation phase 1 is a fancy way of saying price has enticed early sellers, and they, of course, get manipulated out by this move, right? This move over here. Now we have the enticement of buyers, right? So this is what we call the high of the day, and we use this as one of our principles to determine an overall exhaustion in the trend, right? I get lots of questions about the exhaustion of the trend. So here is an answer to that, right? So we use the Asian range. Next up is the daily PO3, or simply the daily candle. And so the daily candle is important to us because the daily candle essentially tells us where the daily opening price is going to be. So this is the daily opening price, right? So DOP, I'm just going to write DOP for short, right? This is the daily opening price. This is going to be midnight at New York time or EST. And so once you have this time in place, you want to understand the trend will most likely end a bullish trend will most likely end when you're above the daily opening price. And so when you have a daily opening price, think about this. We have structure break here, structure break here, structure break. We had all these multiple structure breaks, right? And now we've broken structure over here. So what you're looking for is you're looking for a trend reversal that is significantly above the daily opening price. Ideally, of course, alongside that, we've taken out the Asian low. This is added confluence when we take out the, Asian high. This is added confluence when we take out the Asian low because this represents a two-phase manipulation. And so if we just take a look at this now, we go on to step number 3. But before we go on to step number 3, we just want to kind of draw traders' attention back and look at one thing, right? I always look for a multitude of things before I go on to the lower time frames, specifically to order flow. And so what we can see is price has left a fair value gap over here, right? This is where price has reacted from. So this is the fair value gap in blue. And so what we can see is price has tapped into a fair value gap. So it's no coincidence, right? This happens day in and day out. So if you're looking for an entry model or you want to look for a specific way to trade, you want to be trading in line with fair value gaps and liquidity, right? PO3 and order flow is just the confirmation. So if you're looking for a trend reversal, if you're looking for the bullish trend to finish, you're looking for price to tap into a fair value gap. You want to be above the daily opening price. But what makes fair value gaps A+? What makes fair value gaps high probability, right? So again, fair value gaps themselves are used by basically all the traders these days, ICT, SMC. There's a couple of things you want to use. So fair value gaps, you want to be trading them on the 15-minute time frame, right? Or the 1 hour time frame or the 4 hour time frame. In this case, because we're looking at lower time frame scalps or lower time frame trend exhaustions, I'm going to use a 15-minute time frame for fair value gaps. So fair value gaps have to be on the 15-minute time frame. They need to be above the daily opening price because this is going to be a bearish scenario. So a bullish trend has been exhausted. So you want to be above the daily opening price or DOP. And the last thing you're looking for is you want to see liquidity being swept. And so what do I mean by liquidity being swept? So there's a couple of ways to look at that again. You want to see the Asian high and Asian low being swept. But more importantly, if we take a look at this POI, this fair value gap, right? Take a look at what actually happened. A lot of trend exhaustion comes down from understanding the correct overall context of the market, right? What is the market telling you? So when we have this previous day high like this, right? This was equal highs and this was the previous day high. In this case, this was Friday. So Friday, we come into Monday, and Monday aggressively swept Friday's high. So these are the previous day highs, and this is my favorite kind of liquidity sweep, right? When you see a previous day high liquidity sweep, right? In this case, it's going to be PDH, right? When you see a previous day high sweep, this significantly increases the likelihood of the fair value gap playing out, right? Because we've swept liquidity. So when you see a fair value gap, you want to qualify it with some kind of a liquidity sweeps. You want to see liquidity sweep, you want to see a fair value gap, and you're looking for some kind of structure break. So in this case, you see a structure break over here. So structure low, structure high, structure low, structure high, and then we have a break just over here. So this is now how we form a trade exhaustion, if that makes sense. You want to see what's going on in and around this fair value gap, right? This is the most important thing. And so when you have a fair value gap, the next thing we do is we go down to order flow. And so order flow is kind of that missing piece as to what's going on. So when price taps into a fair value gap, you want to understand the behavior inside of the fair value gap, just like this. You're looking for this kind of behavior. So what we do now is if we go to the A-test platform. So the A-test platform is the same as TradingView, but it gives you information, it gives you details on what to look for. So I'm going to do the same thing. We had that same fair value gap from Monday. I'm just going to mark it out like this. So we had our fair value gap something like this, right? The data is slightly different. This is YM, so this is futures, and this is US 30, right? But the data and the candles are the same. So we want to know what's going on inside of here, right? So why did the trend actually end? Right, the trend is your friend until it ends. Why did the trend actually end? Right, so let's just kind of study what's going on here. So when we come into a fair value gap, right, there's a couple of things we're looking for. We want to see how the buyers and sellers are interacting with each other, right? We want to see the bid and the ask. So let's just quickly go back to the candles and let's kind of take this to the side. So when we see price coming into a fair value gap, right, we're looking for a couple of things. So let's just mark this out. We want to see price entering, right? And then we are looking for some kind of absorption, right? So what does the absorption mean? So we are looking for what we call aggressive buyers. So we're looking for aggressive buyers, and you want to ask yourself, if I'm looking for potential sells, why am I looking for aggressive buyers, right? Isn't that counterintuitive? Well, no, that's not the case, because if we look at a candle, right, if we just kind of break down how a candle actually forms. So let's say we have a bullish candle like this, and you're going to notice I always refer to two numbers, right? We always have the bid and we have the ask, right? So when we come into a candle like this, right, let's say we come into a candle, let's give this a name. Let's just call it a green candle, right? So this is a green candle, similar to this. So what we have is we have two numbers. We have the left number, known as the bid, right? And we have the right number, known as the ask, right? So for basic knowledge, for those who don't know, we have the bid and the ask, right? The market is all about predicting the auction between the bid and the ask, right? The more you can understand the bid and the ask data, the better you are at going to be at just predicting the market reversals, basically. So simply put, right, we have the bid, which represents what we call aggressive. I'm just going to write AGG sellers, right? We have the ask, which is the opposite. So we have, again, aggressive buyers. And so when you see aggressive buyers in this case, right, we're looking for aggressive buyers. When you see these aggressive buyers entering the fair value gap, right, so what you're seeing is you're seeing the ask a lot bigger than the bid, right? So you're seeing the ask being a lot bigger than the bid, right? And this is what we see over here on the ATAS platform. So if we just take out the ATAS platform again, this is Dow Jones. Sorry, just waiting for it to load. If we just take a look at what's going on, we see multiple areas where we see significantly more aggressive buyers and sellers, right? The nice thing with the ATAS platform is that it gives you what we call delta outliers. And so what do I mean by delta? So delta is basically the difference between the ask and the bid, right? So let me write this down. So delta equals ask minus bid. And so this is important because there's obviously two types of delta we can have. There's a positive delta and there's a negative delta. So what happens is if the ask is a lot bigger than the bid, this means we have positive delta. Positive delta. Now, if we have it the opposite way around, what that means is that the bid is a lot bigger than the ask. We now have what we call negative delta. And so why is this important? Coming back to our trend exhaustion inside of a fair value gap, right? What we're looking for is we're looking for the market to give us an indication, right? Just going into a POI or a fair value gap and then going off a candle confirmation or a candle closure isn't quite enough. It's not accurate, right? Because you're relying on ICT concepts or general price action concepts, which isn't necessarily the most reliable. This is the most reliable way to form trend reversals. So when we come into the candle, we're just going to be focusing on where we see the outliers. In particular, we see here 9 for 27, 5 for 19, 10 for 25. So we can see an overwhelmingly positive delta, which means there's more aggressive buyers than sellers. Now, when we go to a fair value gap, when you see a lot more aggressive buyers and sellers, if I just continue to play price on a little bit, this is kind of where we're looking. We're looking in this region. We're looking here. We're looking here, right? So what's going on in this particular region, right? We want to go to our ATAS platform. We want to understand what's going on. We're seeing a significant number of aggressive buyers, right? At the top, we see here, we see 0, 0, 0. We see zero prints, right? Zero prints is also important. A trend reversal is more likely to happen when you see zero prints, right? Zero prints is basically a way of saying there's no aggressive buyers, right? Sellers. There's no aggressive sellers. 0, 0, 0. What that tells you simply is that the buyers are very much aggressive, right? We see aggressive buyers, right? We also see here 3 for 21. So when you see other traders using, heat maps, etc., you only need to read numbers at key levels. It's really that important. It's really that simple. So when you see a lot of positive delta, in this case, we saw positive delta over here, right? Even though it's a red candle, what's super interesting is that the top of the candle was dominated with aggressive buyers, right? 6 for 16, 4 for 14, right? So if we just go over here, we are seeing aggressive buyers, right? I'm just going to write AGG buyers. What this means is that these buyers aren't very successful, right? And this is how a fair value gap works. So I'm just going to write SUCC. So what's really going on is that these buyers were really unsuccessful because price broke below the level. And this is how fair value gaps work, right? So if I just kind of draw this out separately for traders so they understand, if this is a fair value gap, let me label it in blue. If this is a fair value gap, right, you're looking for aggressive buyers to come in. And if these aggressive buyers stall, if you see a stalling over here, you want to ask yourself the question, what's going on with the buyers, right? What is going on here? This tells us one thing, everyone. This tells us that there's more passive sellers than aggressive buyers, right? So what's going on is there's no such thing as more buyers and sellers. There's more passive sellers than aggressive buyers. And this is what moves the market lower. Now, the same thing happens over here, right? You just want to focus on the blue. The blue represents the delta outliers. Positive delta outliers means there's more aggressive buyers than sellers. Now, we see that in a multitude of areas. Yes, we broke above the area, but what you want to understand here is we're still within this fair value gap, right? On the 15-minute time frame, let's clear the charts one more time, right? We can see we're in this 15-minute fair value gap, right? Fair value gap just resting over here. Boom. So on the 5-minute, if we just get the candle up next to the footprint charts next to the candles, and I want you to really look and understand what's going on, right? It's not necessarily rocket science to understand this, right? It seems complicated, but it's not. We can see a ton of aggressive buyers coming in the market, right? Aggressive buyers, and we even see aggressive buyers. Now, if you take a look at this exhaustion at the top inside of the fair value gap, right? This is the true exhaustion of a trend. The reason it's an exhaustion is because, right, what's going on is we see price melting down, we see price breaking below the fair value gap, barely breaking above the fair value gap, right? That gives you candlestick confirmation. But what gives you the real confirmation is the shift in the delta after several zero prints. So we see 0, we see 0, 0, 0. We see a lot of zeros resting on the left-hand side. And so that means there's no aggressive sellers, there's only aggressive buyers. And so when you see aggressive buyers, right, trying to obviously drive price higher, right, we see the aggressive buyers failing, and ultimately failing. So all of these aggressive sellers have been wiped out. And so when you're forming a trend, you want to understand who is failing, who is being absorbed, right? It's really that simple. In this case, buyers have been absorbed. And so when you're looking at this regular candlestick pattern, what's going on is that we had buyers over here, we had buyers over here. Now, if these buyers were successful, they would have broken above the level. But they failed on multiple occasions, right? This is why the trend reversed, right? This is the way you catch trend reversals. And so if you were trading this, a break below the zone would be enough with a fair value gap, with a stop loss just above here. And the reason you can have your stop loss here, again, if we go back to regular candlestick charts, is simply because we had zero prints, right? So when you see zero prints, or when you see a 0 at the top especially, this represents a wiped out auction. It means the auction's been wiped out. There's no sellers present. There's only buyers. So if there's no sellers present and there's only buyers and the market breaks below, that tells you that these buyers are, they're aggressive, but they've not been rewarded. They've been absorbed. And so that is what causes the exhaustion of a bullish trend. And this is the reason the market moves lower, right? So again, quick one on the targets. Well, where do you target, right? Well, simply put, we have equal lows from London. That will be your target, right? So we're simply looking to sell. If I bring up the power of 3, we're looking to sell above the daily opening price, which is here. And we're looking to target lows from the London session, right? So that's basically how a trend absorption works, right? So we use all the principles together, right? Every single principle. So if I break this down again one more time, when you're looking at a bullish trend like this, right, price is going to go higher, 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 and higher. And so a reversal is more likely to come when you combine it with the following conditions. You want to see price tapping into a fair value gap, right? i.e. a 15-minute fair value gap, right? So this is going to be some kind of a bearish fair value gap. And when we see price entering the fair value gap, we want to see aggressive buyers, right? They fail to break above the zone, which validates the fair value gap, right? If this is going to be your daily opening price, you want to be selling above the daily opening price, targeting lows from London, right? Or targeting Asia low or the previous day low, whatever it may be, right? And that is how you can catch these trades like this, right? So if you like this video, give it a like, give it a thumbs up, and I look forward to seeing all of you in the next one.